Women-owned businesses now account for nearly half of all new small business formations in the US. Welcome to the Commercial Pulse update for March 24th, 2026. The Experian Commercial Pulse is a bi-weekly report offering a snapshot of the US economy and its impact on small businesses. Unemployment came in at 4.4% in February, ticking slightly higher month over month, while wage growth continues, but at a moderating pace. At the same time, inflation held steady at 2.4%, with core inflation at 2.5%, marking one of the lowest readings we've seen since early 2021. Small business optimism registered at 98.8 in February, showing some softening. And consumer sentiment declined to 55.5 in early March, reflecting growing uncertainty, driven in part by geopolitical developments. The conflict in the Middle East has already had a measurable economic impact, with crude oil prices surpassing $100 per barrel for the first time since 2022. This has pushed fuel prices up significantly, rising more than 30% month over month, and is likely to create additional inflationary pressures in the coming months. At the same time, the Federal Reserve held interest rates steady in March, marking the second pause this year, following rate cuts late in 2025. While inflation remains relatively contained for now, rising input costs and global uncertainty are key factors to watch. The Experian Small Business Index rose 8.5 points in January to 54.3, up 12.8 points year over year. With the index sitting comfortably within the healthy range of 40 to 60, this indicates a favorable environment for small businesses. This improvement was driven by lower credit utilization and fewer overdue balances, alongside increased demand for and access to new credit. However, some early-stage delinquencies and later-stage commercial delinquencies showed slight increases, suggesting that while conditions are strong, there are still some pockets of risk to monitor. And we'll be watching closely as February data for the index becomes available in our next update. Women-owned businesses continue to be one of the fastest-growing segments of the U.S. economy. In 2025, women owned over 14 million businesses in the U.S., nearly double the amount from 20 years ago. Collectively, women-owned businesses generate nearly $2.7 trillion in annual revenue. However, the structure of these businesses differs in meaningful ways. Women-owned firms are more concentrated in service-oriented industries, tend to be smaller in size, and are often earlier in their business life cycle. Hawaii, Virginia, and Colorado have the highest percentage of women-owned businesses. Despite this impressive growth trajectory, women-owned businesses still face disparities in revenue and access to capital, often receiving less funding than businesses owned by males. Compared to male-owned businesses, women-owned businesses tend to seek less commercial credit overall, rely more on personal funding sources such as friends and family, and are more likely to utilize credit cards and online lenders rather than traditional bank financing. They also tend to have fewer commercial trade lines and lower credit limits. However, despite these differences, credit utilization rates are similar, indicating disciplined credit management rather than reduced demand. From a risk perspective, delinquency rates between male and female-owned businesses are comparable. However, average commercial credit scores remain slightly lower for women-owned businesses, driven largely by differences in business maturity and credit history. Encouragingly, the gap has been narrowing in recent months. Another important dynamic is generational. Among millennials and Gen Z, women are now starting more businesses than men, often motivated by flexibility, autonomy, and the desire to control their own schedules. Taken together, this points to a segment that is not only growing rapidly, but evolving, bringing new patterns of credit behavior, new funding needs, and new opportunities for lenders. And we'll have a lot more on women business owners in this week's report, so be sure to subscribe. To learn more, visit our Commercial Insights Hub for deeper insights on small business trends. Subscribe to our YouTube channel for the latest updates, or reach out to your account team to start a conversation. And last, remember to keep informed, to stay ahead, and we'll catch you on the next one.